Hello and welcome back to our series here on Dummy's Guide to Investing, our how-to series, where we're taking a look at everything online and breaking it down to you, giving you the easy and most expedient way to understand the basics of investing. And so we're going to continue our series of how to read a stock graph right now. And we've been on TradingView doing just that. And so here we are back on TradingView.com looking at the Apple stock price over the course of a year. Now this stock graph is bars, and we've already gone over that, and so I'm going to show you guys now the Renko graph. So what is a Renko graph? Now we take a look at the bar graphs and you look at a Renko graph, it is significantly different. You can see that you can still get a general indication of the price, but it's quite a bit different than both candlesticks and bars. So let's just take a more detailed look at what this means and why some traders prefer the Renko graph, in fact. So Renko charts are quite simply useful because they're one of the more easy and straightforward graphs, and that's why some people prefer them. They interpret things slightly differently because they don't use traditional indicators like volume, opens and closes. They only look at price movement. These little boxes measure price movement. That's the only thing that goes into that, and you can set for yourself just what price movement will then create a new block. But let me get into a bit more details here and just why people might, some traders prefer using the Renko charts. And they typically do so because they're just a lot easier to interpret once you have a trained eye and you know what you're looking for. And they also filter out a lot of other variables besides the price movement. Again, these really focus only on the price movement, and they're popular also in discovering basic support and resistance levels. So if you don't know what that is, we'll get into that at a later one. But support and resistance levels are key indicators that things might start changing around or moving with particular stocks, and even breakouts. This is a great graph for identifying breakouts and generating signals with additional indicators. So the Renko graphs are broken down like this. You see this little number up here, $1.75, 1.75. Now this was a predetermined amount of how much each of these blocks indicates. Now when the price moves, whether up or down, $1.75, then it creates a block. So it doesn't matter if it could be one block could have taken a week or even a month to move that much, $1.75, in which case that would represent either it could be a small amount of time or a long amount of time. The timing does not matter, it's only price movement. As you can see here, Apple had a kind of a steady downward trend here, and for every time it took a dip $1.75, a new block was formed. A red block indicates obviously a downward movement. That's pretty obvious. So another $1.75 down, another $1.75 down, another $1.79 down, but it came up another $1.75 and then continued its downward trend until it kind of bottomed out here and turned around. So the great thing about this is you can go into actually preset all the parameters of what you want your Renko chart to look like, whether you, depending on the stock, obviously, when you're looking at Apple, the movement of $1.75 is pretty common because it's a high value stock, whereas other stocks that might only be worth $5, you might set your Renko block at just 5 cents or 10 cents. But once the graph has moved in one particular direction or another, the brick size that you determine, then it will be formed either green or red indicated by you, which is great because it's a great way to, again, look at different breakout, resistance levels, and different various forms of stock forms. So to kind of break it down to you in more layman's terms, it's important to note that bricks are only added when price moves completely, fill the predetermined brick size. Prices may exceed the value of the previous brick, either above or below. However, a new brick will not be formed until the price movement is large enough. For example, let's say the brick size is set to 2 points and the last brick covered prices were 52 to 54. The new brick won't be formed until the price closes either at or above 56 or at or below 50. So if you set each block to be $2, it has to be either $2 below or $2 above the current price to create a new block, whether up or down. If price closes above 56, for example, to 57, a new brick must still stop at 56. And then a new brick will be formed again at that 56. If the next day's trading ends up at 58, then of course a new block will be formed. But blocks are only formed when the predetermined price has been hit and a block is formed. So this gives you a quick indication, obviously, of the movement, the trend, but it's helpful for certain traders who really don't want to get lost with all the different other variables and they really want to just focus on price movement. So this is the Renko chart developed by the Japanese, who are pretty smart fellers. So I do like this chart, and we will be getting into some of these other charts here in our following tutorials or how-to guides. So next we'll be taking a look at line break. So do tune in for that. But for now, this is Dummy's Guide to Investing. Thank you for tuning in. As always, we're with you every step of the way.